Owen's here with business then, turning into a bit of a bad week. Not for him, but for Facebook. Flotation now under investigation by financial watchdogs. Going from bad to worse, isn't it?
It's not the way it should have started for Facebook. Sure, I can tell you that Facebook's share price is down once again on its German listing this Wednesday morning. The market's not long having opened. Worse, though, was the performance in its native US. The share price of Facebook closed down 9% on Tuesday. It may be the biggest IPO ever, but among investors, Facebook's credibility is now starting to be openly questioned. Its stock took another pounding, losing billions off its market value. What went wrong is now the focus of a financial watchdog inquiry centering particularly on underwriters Morgan Stanley. William Hildebrandt has the details for us.
Expectations too great even for Facebook. With over 900 million users, the world's largest social network launched its highly anticipated IPO last week, but failed to meet market hopes.
Everybody's been told, look, just wait till May 18th. Facebook is going to pop. Everyone will get very excited about the internet.
But instead of pop, investors got a dud. They say there wasn't enough demand for the 421 million share IPO, and before long, Facebook shares fell 18% to $31, and the company's valuation lost some $16 billion. Some blame Morgan Stanley, the lead underwriter, for allowing Facebook to increase expectations despite revising its own forecasts on revenue growth.
There was this hype that was created, all this demand, and people wanted it. They were going to move the price up, so they go to the insiders to say, listen, if we move the price up, you can sell more stock.
Now Massachusetts authorities are investigating whether Morgan Stanley mishandled its promotion of the shares. The question is whether its analysts took the highly unusual step of scaling down their forecasts and publishing this information to clients ahead of Facebook's flotation.
Morgan Stanley is not only a respected company, but it was the underwriter of the shares. So it creates some confusion. There'll be some institutional investors, savvy investors that'll go from being optimistic about Facebook, buying Facebook, to turning around to selling it short.
Adding to the chaos, one investor is suing NASDAQ, claiming software glitches delayed the IPO's debut and caused losses. But there were some winners. Facebook CEO Mark Zuckerberg managed to sell his stock close to the original IPO price. He turned his 30 million shares into just over $1 billion.
And also good. And Facebook's performance, in fact, reflecting the state of the markets right now.
Yeah, we thought in our naivety, or at least my naivety yesterday, we might get some traction on the markets with some gains. Forget all that. The European markets going into this EU summit in Brussels, pretty much, as you say, reflecting those leaders' state of mind right now. All of the European markets down as much as 1.5% at the opening bell. On the Asian markets, the Nikkei finished nearly 2% down at one stage, as low as 8,600 points. So another day to forget on the Asian markets.
And there are one or two investors who think that Burberry's meteoric rise are over, but maybe not just quite yet.
Yeah, I think if you shorted Burberry, Stuart, on that basis, you're probably going to be disappointed. But it's good news for Burberry. Its full-year earnings, a 26% rise in profits. In fact, Burberry says it's going to continue expanding, plans to open 15 new stores in emerging markets, expanding those it already has in countries like London. It's done very well when you compare it to its rival Aquascutum, now in administration. And I put at the bottom of the earnings borders there as well a tale of two computer manufacturers. Dell in the US, its first quarter profits down more than a third. Lenovo, China's biggest computer manufacturer, its profits up 73%. And there was I thinking that people don't buy laptops and computers anymore. I thought it was all tablets.
Obviously they do. And also some figures from Germany which have caught Owen's eye. You think it tells us quite a lot about the current economic climate?
It's easy to get drowned out by all this data, Stuart, but if you keep one set of numbers in mind right now, then keep these numbers for Germany. The German government will today auction off around €5 billion in government debt with a 0% coupon. Now, what that means is if you and I buy into that debt, we will get 0% interest. When you take inflation into account, you and I, Stuart, would actually be paying the German government for the privilege of lending it money. That's how far the wheel has turned in this Eurozone crisis. And it's an indication of just how much investors are taking flight from risk right now. With equities, with the stock markets down, there's really nowhere to run to. And people would rather take 0% interest on an investment with the German government just for the peace of mind and knowing that it's safe, knowing that they're going to get their money back when you compare those interest rates with the borrowing costs of countries like Italy, like Greece, like Spain, which have gone to record highs. We know the story of those countries, particularly Greece, which is, of course, according to many, on its way out of the Eurozone.
So is that why Germany can go into the summit kind of resisting French demands to cut these countries a bit of slack?
Yeah, some people call it German arrogance, the fact that they're almost alone in resisting these calls for some sort of growth pact and saying that these EU countries like Greece, like Spain, have to get their financial houses in order and get those austerity programs well and truly entrenched before they start talking about growth. And you can understand why, if investors are willing to pay the German government to lend it money and prepared to stick with this country, then you could say, does Germany actually need the EU at all?
OK, well, let's get a little bit more company news for you now, starting with Formula One's impending flotation gathering pace after 3 investment groups bought a 21% stake in the motor racing sport. Waddell and Reed, BlackRock and Norway's Norges Bank spent a combined $1.6 billion buying stock from Formula One's majority owners CVC Capital. The deal sets a value of around $7.5 billion ahead of Formula One's flotation on the Singapore Stock Exchange. That's next month.
Britain's government has denied offering GM any subsidies to build its new generation of Astra cars there rather than in Germany. GM has agreed to make the vehicle under its Vauxhall brand in England's northwest rather than Bochum in Germany. Both plants have been in danger of closing, with GM racking up nearly €600 million in losses last year. But under current union agreements, GM is barred from shutting down European factories.
And Crédit Agricole has become the latest target for shareholder anger. Attendees at the French bank's annual meeting in Paris tore into the board over the €14.7 billion losses that have driven its share price down by 70% over the last 12 months. The firm told shareholders it's asking Greek authorities for access to an emergency liquidity fund to prop up its loss-making Greek subsidiary. That's Emporiki.
Now, if you think gambling, of course, you're bound to think Las Vegas, but the semi-autonomous Chinese province of Macau is bigger, and it's growing even bigger right now. Neighbours from Singapore to Vietnam are also trying to get in on the act and sizing up the potential of millions of customers with money to burn and very few places in Asia to actually burn it.
It's more than just the Las Vegas of the East. Thanks to a gambling boom over the past decade, Macau generates 5 times the gaming revenue of the U.S. city. Many are hoping to hit the jackpot here, but the competition is fierce. The city already has 5 casino resorts, and that number is expected to double over the next 10 years.
I don't think that a slowdown in the next year or so really will impact the Asian gaming market, except on the fringes. You have millions and millions and millions of people who can't legally gamble in China other than here.
Macau has faced few obstacles since liberalizing gambling in 2002, but the days ahead could be a different story. China's economy is cooling, and the region could be a victim of its own success. Standard & Poor's sees medium-term risks for gaming companies in the area due to billions of dollars set to be invested over the next 5 years. But regional players remain bullish. They think Macau offers a unique experience for the gaming enthusiast.
In some ways, if you look at the model of Las Vegas, where it's certainly more heavily weighted towards non-gaming, we want to move in that direction, but there's a constructive balance between gaming and non-gaming here.
28 million visitors flocked to Macau last year, a city whose population is just 500,000. All the traffic helped the economy grow 21%, but there are fears of a labor shortage. With unemployment at 2%, casinos have trouble finding staff, and small businesses have trouble keeping staff.
Macau there, place to go apparently if you want to lose all your cash. Owen, thank you very much. More from him, of course, here on France 24. Stay tuned if you can. Latest from Claire after the break.